Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So, in today's video, we'll take a look at the news, we'll do a market recap, we'll look at the trading opportunities, and then we'll wrap it up with looking at the economic data we have coming up for the rest of the week. And remember, if you do like the content, feel free to like and subscribe. So, we'll start here with the banking crisis developments this weekend. We had Warren Buffett meeting with the president. As you know, Warren Buffett has just like an insane amount of cash. I think it's like 150 billion. It might even be more. I'm not really sure, but I know it's like an insane amount of cash on hand at Berkshire Hathaway. So I'm sure Biden's meeting with him to talk about, trying to help out with this banking crisis. We did have UBS acquire Credit Suisse at a 60% discount. They ended up buying them for like 3.2 billion, and Credit Suisse had 531 billion worth of assets. So it was way more than a 60% discount. We also had the Swiss government providing 100 billion liquidity line to UBS. We had the Fed announcing USD swap line for liquidity, and we had the Treasury Secretary saying the banking system is strong, which is comical, obviously. Here it is right here. They bought them for $3.25 billion, and they did this without shareholder approval. So actually, the Switzerland government is like changing the laws in order for this merger to or this acquisition to go through. And this is that Fed swap thing he was talking about. We have several major central banks announcing a coordinated action to increase U.S. dollar liquidity provisions in the global market through these swap lines. And these are the central banks that are coming together. Basically, they're working together to like supply infinite money. Basically, this just the money printer is just max speed now. They're just printing infinite money, and this is like just the official like announcement from the European Central Bank saying that they're gonna help the Fed print money. And this is the amount of derivatives held by banks. This is the top 30, and the global derivatives market is over $2 quadrillion. And imagine what happens when this blows up, right? Goldman Sachs alone has 53 trillion in derivatives. That's just hard to wrap your mind around. And this is the uninsured deposits by bank. As you can see, a lot of these massive banks, majority of all the holdings are uninsured. We also have Amazon laying off 9,000 additional employees. We have housing affordability hitting an all-time low. We have the U.S. sending another 350 million in weapons to Ukraine. The warlords just keep getting super rich. And we also have in the XRP versus Ripple versus SEC case, we have Ripple filing a letter notice of supplemental authority in further support of their fair notice defense, which is good to hear. We are expecting some news from the judge on this case very soon. So now let's turn to the charts. Starting here in the debt market, we have the 10-year yield. Green day here in the 10-year yield after getting a massive wicking off this lower extreme here on the weekly chart. The dollar, red day in the dollar, breaking through last week's lows, pushing down here into the lower daily extreme. As you can see, we are just rolling over from getting rejected from that midline there on the weekly. And these weekly bands are getting tighter. Looking at the S&P 500, we do have a green day here in the S&P 500, kind of an inside day, not breaking through Friday's highs, excuse me. And we are just making our way up here towards this midline. Bitcoin, red day here in Bitcoin, not too much action, wicks to both sides, just kind of sitting here in the middle of that daily candle, just right up here in this upper extreme on the daily and on the weekly chart. So, yeah, not too much action here in crypto to start the week, but I'm definitely expecting something to happen this week, so this is definitely something we'll be keeping an eye on. XRP, it looks like it kind of wanted to get some action going yesterday, but got a big wick close down through below that upper range there, that upper band, and just sitting here right at the midline on the daily chart. Weekly just getting tighter and tighter by the day. So oil, we do have a green day in oil after wicking down and making a new low below Friday's lows. Green day here. Gold, red day here in gold after, getting a nice push up, really close to all-time highs here on gold. Silver, red day in silver here too, just kind of sitting up here at the top of this upper range on the daily chart. Still sitting above that midline there on the monthly chart. So now we'll look at the trading opportunities, starting here with the SPY. If you remember Friday, this was Friday, we had the big gap down, we had the sell-off with the descending channel, then we kind of just chopped around through the rest of the day. So today we opened up slightly higher than what we closed on Friday, and then we did get a rising wedge here, which is a bearish reversal pattern. And once we did break through that, we did get a nice move to the downside here. So with these bearish reversal patterns here, you want to short when it breaks that lower downtrend line or uptrend line. So yeah, this would have been a nice opportunity to take advantage of a bearish pattern. I do have these puts pulled up down here. So if you got in on the breakout, we'll say you're getting in around, I don't know, like 130. These contracts did end up making a 106% move. But there's something I want to note about this pattern, that this is definitely a high risk pattern to short into. Because as you see here, we are breaking up above that 200-day moving average. And so us pulling down into this could have definitely caught a bid here, right? This 200-day moving average is a major technical level that a lot of algorithms and people watch. So this could have easily caught a bid here. And another reason why this was a higher risk short is because we did have the moving averages on the 1 hour, the 2 hour, the 30-minute, and the 15-minute. They were all in bullish, right? They were all bullish with the 9 being above the 20. So typically it's like not ideal to short into like bullish moving averages, right? So yeah, this was definitely a higher risk short trade, but I mean this was a nice pattern. I mean this is a bearish pattern, so buying puts here would have made sense. But you have to realize if you're gonna buy these puts, it's gonna be high risk because there is bullish things on the charts. And then so we got the bounce, strong bounce, because we were bullish. It pulled down into these moving averages, and then we did get a broadening wedge, descending broadening wedge into the close, and this time it actually caught a bid here at the 200-day moving average and got a nice push up into the close here, like almost double topping here at these previous highs from early in the morning. And this would have been a good opportunity for call options because we also did have a squeeze with upward momentum and a MACD cross. And if you remember on the 15-minute, we had these 1 hour, 20 and 90 EMA acting as support, pushing us up. Same here on the 2 hour, pulling into those EMAs, and same here on the 30-minute. And there's something I want to note here on the 2 hour chart. As you can see, we are kind of forming this channel here. This could be a potential bear flag that we are forming in the S&P 500. As you can see, the big drop and then kind of the flag pattern. So yeah, just keep an eye on this. We'll see how this pattern plays out, or see what happens with this pretty soon here. But yeah, this was a lot like Friday. You know how Friday there's a big range in the SPY, so you had the call options here into VWAP, and then you had the short back down to retest the lows. There's opportunity for calls and puts. The same thing today. I mean, the market's definitely having increased volatility. We do have that Fed rate decision coming up on Wednesday. So we did have, opportunities for calls and puts today with the short into this rising wedge and the calls into this broadening wedge into the close. And there's something I want to note on the close, on these contracts in general. So this rising wedge, these puts we got on this breakdown, these were today's expiration, right? The 20th. But with these call options, right, on this breakout, we went with tomorrow's expiration because you're buying these contracts into the close here. I mean, there's 30 minutes left in the day. If these don't go your way, I mean, you're losing the whole principal, right? You're losing all the money you invested because these will go to zero real fast if this breaks down just slightly, like these contracts are going to zero. So you want to give yourself some more like theta, right? Some more time to work with these contracts so you can actually have a decent stop loss and the volatility isn't driving you crazy. Because if you're holding these call contracts and these are 393s, right? I mean, every movement up in here, I mean, is probably a 15, 20% move in the contracts, and that would just, you know, that's a lot. Like, that's a lot of movement, right? That's a lot of volatility to like sit there and deal with. So I would, if you're gonna buy SPY options into the close, I would go out another day or two. I wouldn't, advise buying contracts that expire in 30 minutes. That's just the time decay is really gonna mess with you there. But yeah, so big volatility day here on the S&P 500. Going in and out of this 200-day moving average. When it does come to the other trades, I mean, to be honest, there really wasn't any other trades today. I mean, you can look through the scanner here. I mean, this was a really volatile day. I mean, Apple had a nice day, but it didn't have any good squeezes, right? It got a really tight squeeze here in the close, but it didn't really get a push with the rest of the market. I mean, there was some pops in the morning, but a lot of them just like sold off when the market sold off here and then just kind of died. So not really any good squeezes to talk about. I mean, a lot of the sauce today, like most of the trades were just here in the SPY with the puts and the call options in the close. And with the Fed rate decision coming up on Wednesday, you have to expect the market to be a little crazy here. So yeah, that's why we were really just kind of focusing on the SPY today. I mean, we were scanning hard. I mean, there was really nothing to, really going on, making any good moves or setups at all. Yeah, as you can see, I mean, there's just nothing really there. So yeah, that'll do it for the trades. Pretty much all the trades that were good today were here on the S&P 500 Spider ETF. So now we'll look at the economic data we have coming up for the rest of the week. Obviously, there's no economic data today, and then tomorrow we have existing home sales. So yeah, that should be interesting. But we're still all just waiting on Wednesday. That's gonna be the big one. Well, appreciate y'all watching the video, and I will talk to y'all later.